Holy moly, it's Friday here at RCO Network, Studio 110, Phoenix, Arizona, coming at you live on the lunch hour, talking about money, finances, and everything that makes this world work. So I am joined here by two lovely guests, one more lovelier than the other, but he's got his personality too. So if I may introduce our first guest, Miss Erica Martinez Morales, also known as M2. Hello, Miss.
Hello.
There she is. And then also coming from Sacramento, California, we have Henry. Oh, sorry. I called him by his real name. Sacramento Satoshi.
Thanks for calling me lovely.
Our intro music cut off. I got to work on that. Anyway, so we're here live on a Friday talking about money and finances. If you like what you're seeing, go ahead and hit that like button. If you're on YouTube, hit the love and subscribe. Why not watch us every week, make a fool of ourselves? Because what else we got to do on a Friday at lunch besides drink?
True. And share it too. Share it. Share with people so they can watch it.
You know, so we're coming at you on a Friday. We're about 41 weeks into this year. We started a new quarter. Everything going on money-wise, just some volatility, some craziness. The economy's not matching the market, but we're all here to talk about all that stuff today. So I did want to lead with something. So this morning, and I guess maybe I'll take a step back and say, you know, this whole ride in understanding stocks and trying to manage my money, I have been taking courses. I've been learning a little bit more. I've been talking to Miss Erica. I'm sorry, M2. I've been talking to Satoshi. I've been talking to a lot of people about how to manage this money, how to make money off of money. Because in everything that I'm reading, it's, you know, you need to manage your money better. You need to use it in a way that it makes money on itself. You know, going to work 40 hours a week, 50, 60 hours a week and making a paycheck isn't necessarily getting anybody anywhere. Might some people, but not everybody. I think not in mass. And so when I'm talking about stocks and talking about information relating to stocks, that's where everything is kind of pointing me to. Like, hey, you know, you need to invest your money in certain businesses, aka stocks, and use that to leverage and make more money off of that. So the big question is, how do I do that? And I think everybody's out there wants to do the same thing. I think people out there, generally speaking, don't necessarily want to work 80 hours a week. Right. They may love or like their jobs. Maybe not everybody, but you know, there's enough people out there that may like it. But they want to use the money that they make and then have it make itself, and not necessarily live paycheck to paycheck or struggle so much. And that's where I'm at. You know, I'm in that transition moment where I have some discretionary money. I am purchasing a house in the next few weeks. But I do have a little bit of extra discretionary money where I want to spend it and invest it and make more of it. Right? Isn't that everybody's dream? That's your dream, yes, right, Miss?
It is.
You know?
Thank you for calling me Miss.
And Erica, wants somebody in her life that can dish out the money just as much as anybody else can.
That's not true.
Why not?
Don't say that.
I want Violet to make money for me too.
Oh, stocks. Yeah, I want stocks to dish out money. Sorry.
Well, yeah, that's what I mean.
Oh.
Right. What about you, Henry? Are you in that game yourself? I'm sorry, Satoshi. Are you in that game yourself?
Yeah. Well, I think, you know, it's the concept of, like you're saying, everybody's got to work, or a majority of people have to work, right? People aren't financially independent. But if you look at your pay over time, your job or your boss or your business, whoever you work for, is going to want to increase your pay based on what they see as the inflation rate. So historically, the government will display the inflation rate at 2%. So your business will say, hey, okay. And I'm talking about a normal, like not somebody owning their own business, but if you work for somebody, you get a W-2 and they'll say, okay, inflation's up 2%. We're going to give you a 2% raise this year. And so.
And you get excited. You get all happy that you got your 2%.
Yeah, but sometimes not all bosses give you a raise.
Well, you got inflation too.
There?
I mean,
but what happens with those people?
You need to find another job, and that's where we're at too, because the unemployment number is really high right now. Still,
really,
people are. You see, but here's the point: is like, so you see this. So on average, the stock market makes 8 to 10% a year. You know, real estate can make 3-4% a year. Crypto is made about 100% on average a year. So when you see those kind of gains compared to your 2%, and then you have the, I don't want to say the word, I guess you can't say it, but over this last year, people were forced to be home.
The sickness.
And it's like, well, I get to hang out with my family.
Use your
I
words.
get to, I don't want to, I don't want to go, do I want to go back to work for this 2% raise every year? Or, you see this a lot with the younger people. The younger people, they're putting their money in this Robinhood. They're like, you know what? Let me take a chance on this stuff. Let me start investing. But it doesn't happen right away, because you don't just get your whole year's salary in one bolus and then you put it into the stock market. So most people have to continue to work. But I think over time, 10% is always going to be 2%.
And I think, again, going back to wanting a quick buck, I think all of us, and I think everybody out there, even people watching, they definitely want some information where they can just throw in money and then say, oh, look, I gave my money to this hedge fund manager. I gave this money to Satoshi. Or my cousin told me to invest in this stock. And guess what? I made $40,000. I'm happy. Right. I think a lot of us kind of want that, but is it a reality? No. And the reason I bring that up is because today I have a person in my life. She's my friend's daughter. And she recently had the same discussion. She was sitting here where Erica's sitting not too long ago. And she's like, I want to learn more about stocks. I want to learn about trading and all these things. And so I signed on to a course, and I actually shared it with her. I shared it with Satoshi. And it teaches you how to trade a little bit, at least the fundamentals a little bit, and how to use technical analysis. And because she's 19, everything that I have the discussion with or talk to her about, seems like she's very limited on time. So she's very much like a lot of the people out there that just want that quick information, that one stock tip where they just put in like 10 grand and then a week later they made 50. And then they can go tell all their friends like, hey, shit, I made $40,000 by putting here. I got this one really cool stock tip. So I shared it with the Satoshi. It was Paragon 28. Have you seen that one, Satoshi? I'm gonna pull it.
I have not. But here's the thing that you got to know about stocks. So every asset that you invest in is going to have some risk. And so when you're talking about a stock, you're talking about execution risk. So it's just like a business. Is this business making money? What's going to propel this business to make more money in the future? Is there some kind of underlying value that's going to increase the value in the future that people aren't aware of? You got to understand that kind of stuff.
Yeah.
And that takes time. And so if you are the kind of like the scenario you described, like I just want to put my money in something that's just going to blow up. Yeah. Well, if you don't want to put in you either have to put in the time, or you're going to have to trust that. So you're going to have to trust this person that gave you this tip that they put in the time.
Yeah.
Otherwise, you're just taking a guess. And so that's where. So the first fundamental thing, if you're going to invest in a stock, you got to know about the company. Where is it going? Is it going to be able to execute? Because if it doesn't, if it expects that it's going to make $20 and it only makes 10, and you bought a bunch of it, you're going to expect that your money's going to go down.
Well, and the reason I brought that up is because, again, we're always in these situations, right? And we kind of do it to each other, you and I. Like, hey, did you check out this one? I even bought some stock earlier this week because it was the crypto mining on a hit. But I looked at the TA on it, and I trusted your information. Yeah. And I looked at it, and I felt comfortable making that purchase. But that was also with a little bit more information on my end that I've learned a little bit since I started this whole process. And I'm sure, Erica, you've been in that situation too. You're like, hey, go check out, like in this case, Paragon 28. I just pulled it up. You can see it yourself. And this is on the hour chart. So apparently this IPO'd today, because I have, if you look at the day chart here, there's like, it just today, it just can't, hold on, let me get out of there.
Just in general, I mean, I don't know anything about this company, but IPOs.
It sounds like a medical company.
For the most part,
so just today,
you're not going to get the greatest deal, because the people that are going to make the money are the people that initially invested in this company. So they put their money in, they built it up, got to a point where their earnings are going to show and be well, or else they wouldn't be going public. And then they're going to try to pump it. They're going to go out there and they're going to say, this is the greatest thing. This is going to skyrocket, because they want to make their money back. They put an initial investment in. Now they're going to IPO. So they want everybody to buy this thing. And so they're going to try to get as much FOMO and pump it up as high as they can get it. So typically for an IPO, when it first comes out, it's at a very elevated price.
Yeah.
So in general, I don't go near IPOs.
Yeah, and I think a lot of people don't either. And I'll hand it off to Erica in a second, but the information, again, going back to how normal people operate. You like today, I get a stock tip, right? This is a stock tip. So a friend calls and says this: just a heads up, our biggest competitor just went public this morning. Medical device company expected to grow a ton. And this is what I pulled up. And this is, again, on the hour chart. Would you necessarily jump on this, Erica, and why not?
Well, I would go and obviously first look at the calendar.
Yeah.
Because if it went public, I'm going to look at their quarterly earnings. And then also look at their MOT to see if it's competitive enough, to see if this company, what their financials are. Because if they're like in so much in debt, I'm not going to buy a stock because if it's going to plunge.
Yeah.
But then again, while that company is taking a crap, you could also make money that way also. But we have to look at it and see what the background is, not like the owner or anything, just the company itself.
But yeah, and so like I think a lot of people that are watching and then in general, we'll get information just like how I got it. She shared and she shared the screen. I guess the screenshot looked like a Robinhood screenshot, and then that information like, hey, they're our biggest competitor. Hot stock tip you should buy today, right? And then you go look at the chart. And again, this is the hour chart because we don't have any days. There's no trending history. There's nothing regarding the stock, but a lot of people out there will buy this just based on that.
Okay, so did we look up the name? Does it have like?
Nope. But again, if you're a normal person not into stocks, and you just heard this information, and people would feel inclined to go pay and buy 50 shares because it's $18 a share, so it's not horribly expensive.
No.
And again, they would buy this on not a whole lot of information, just based on the information they're seeing there.
One thing you said there that I would be careful of is you said it's $18 a share, so it's not expensive. The price of the share has nothing to do with what the value is.
Yeah.
You can have an $18 share in a stock that's worth $9, and it's worth less than Amazon, who maybe Amazon's worth $3,400 and it's trading at $3,100.
Go look at Amazon.
So that's one thing that you have to learn is the price of the share has nothing to do with the value of the company, because it all depends on what's the valuation of the company and how many shares, because every company divides their company into different amounts of shares. So and the other thing is with an IPO, you're not going to have, so number one, it all has to do with risk curve. Okay, so how safe an asset is versus how risky it is. And you have, so a lot of red flags that I see. Number one, it's an IPO. It just came out. So the price is going to be hyped. Number two, you don't have technical analysis. So you can't make a determination on, is this thing low, high, how's it been trading over the last, you don't have a 200-day moving average, you haven't anything. You have 1 day. And number three, you don't have any earnings because there haven't been any earnings yet. So in general, if you let's say you have a company that you're really interested in, a friend told me about this and it's IPOing, for the most part, if you just wait for the earnings, which should happen within the next 3 months, a lot of times, like I said, it gets hyped, earnings come out. For the most part, they're always disappointing, and then you get a drop in the price of the stock. And if you really want to buy it, that would be a better time to get it after a disappointing earnings. But you got to remember, you're out, the smaller, you get to look at the market cap, the smaller this company is, the more out on the risk curve you're going. Okay, so you have more safe things, like for example, like Apple, the bigger companies with more valuation in them are going to be safer than these little small companies. And I don't know anything about it, so you'd have to look into it.
But didn't
that'll be my advice.
No, I was going to say,
that's what I would do. I'm not giving you advice.
Since you talked about Amazon, I brought it up too, and I just showed. These are the channel I made this morning, and I just showed the price. But Erica, you wanted to say something?
No, because look at Coca-Cola back then.
Okay,
It started the same way. And now it's like so successful. So if we did our research on this tip that they gave you, we'll see if the company's profitable. If it went public, there's a reason why it went public. So I kind of disagree with you, but that's me.
Yeah, and everybody has a risk tolerance, right?
And I would look in to see what the net income of that, what was it, Paragon 8, yeah. Paragon 8, what the net income and divided by the invested amount that the company's done. So I would look at it like that because sometimes I don't watch the news. Yeah. Sometimes I will watch like the Morningstar or go briefing.com or whatever. But like I've always said, if I'm going to lose the money, I'm going to lose it because I was the DF.
What's DF?
A dumb fucker.
Oh. Why are you going to be? Oh, so that's a DF, huh?
Nobody heard it. But anyway, and if people would have invested like in Coca-Cola or in Amazon back when it was like $9, $18, we'd all be millionaires.
Right. Well, that's the thing. You want to get into
our own
company
research
when it's disrupting. I mean, that's in general. Yeah. If you, in my mind, just to give you kind of how I approach it, if you want to make money, you got to take risks.
Exactly.
If you want to keep your money, you want to diversify. But to me, if I want to make money, I want to go into something that is a disruptor. So that would be Coca-Cola back in the 1930s. I would want to invest into something that's disrupting an industry, that's young, and that's growing. Once that company once Coca-Cola, grows, and if you had invested in it early, like you said, and you had a bunch of stock in it now you collect the dividends and you have your money. It's considered more safe, but it's not going to like explode into.
Right, but you're saying you would invest something in something that's new. But we always have two buckets. We have our wealth bucket and we have our income bucket. So we could always play it safe on both ways.
So it's kind of like dating, right? You can date the really hot guy, really hot chick, and take the risk that they're probably not going to be long term, but you're going to have a lot of crazy fun, with them. Or you can just date the plain, boring person. It's not going to be a whole lot of fun, but it's going to be a lot of stability. So that's long term versus short term, right?
Yeah. And for me,
no, I don't look at it like that.
I kind of think of it in thirds. So like
there's a third.
So for me, 1/3 of my money goes into real estate. Yeah. 1/3 of my money goes into the stock market, like these, what you would consider like big companies. And you could do that with your 401k. You could do index funds. It's just considered more safe. And then 1/3 is more of the riskier stuff. And so that's where I put so that's kind of how I diversify my.
Well, and that's under the assumption that people have enough discretionary money to divide that up, and then they're well informed enough to say, okay, I'm going to apportion this for this, I'm going to portion this for this, and apportion this, and these are my risk tolerances. This is where I'm at in age, and I could be a little bit more risky because I'm in the 40s. Maybe not too risky because I don't have too much longer to go. Relatively speaking, we're probably not going to all live past 100. So you can kind of have a good barometer there. But it goes back to risk tolerance and stuff too. It's like you can date the hottie, but that comes with a lot of fun. But there's a risk to it too, right?
Well, there's all different kinds of investors. I mean,
different hotties.
And different stable people too.
Oh yeah.
Yeah.
But that goes back to the stock market in itself, right? It's all about emotions. If people see there's a big sell-off, Facebook is a good one. So let me go. You
can't have emotion when you're trading.
But you have to recognize that people are emotional when they trade.
You can't. That's your number one rule. Don't have emotion. That's why women are better traders than men.
Oh, really? Okay, here we go. Ding, ding, ding. Where's my bell?
It's true.
So
there's generally going to be emotion. That's true.
Yeah.
I don't have emotion.
So that's why you use. That's where. Let's say I like a company. Let's say I like Facebook, and I really want to buy Facebook. I will use the technical analysis to help decrease to get it at a good price so that I don't have to make those emotional decisions.
But right now, since you brought up Facebook, I really am watching Facebook right now. because we had a major dip. It's hitting the 200. So the thing I'm concerned about or worried in purchasing right now is to see if it's going to fall below. There's a lot of resistance right on the 200. And so this is one of those things where people will come up and say, "Oh, you should buy Facebook right now." Well, why? Okay, in my estimation, you look at your MACD, you see the crossing there. You look at your RSI; it's very low on the RSI. And then you have it touching the 200. So is this a prime time to purchase? And it's all varies based on your risk tolerance, based on how sexy you think this is, based on what you're going to get long term. Facebook is a company where I believe it's here to stay. Yep. Facebook went down for 6 hours, and people went nuts.
True.
Right. As a company, I don't think they're going to go away. Are they going to be more, restricted and more regulated? Probably. But they're not going away as a company. I mean, they have too many other branches and companies to really go away.
Well, yeah, because it has their name, their trade secret, their network.
Secret.
Their secret. Yes.
Tweety Bird is over. M2 is turning into Tweety.
Like everyone uses Facebook, and it's a network social media.
But what I mean, so outside of the company, so we know everybody knows Facebook. So that's the nice part about this. So when you get a stock tip and somebody's saying, "Hey, you should buy Facebook," like I'm probably telling you and telling him and Satoshi, Facebook might be a good purchase right now.
It is.
Based on what you know and based on what you're seeing, is that something that you would fundamentally go into, or would you even purchase? Because if you look at the price, each share is about $3.24, which isn't an easy pill for some people to swallow. But that's why I was going back to my previous discussion where the IPO is $18.
But if you can't afford the stock, always look at the options. It's more affordable. Yeah. So there's always different ways on how you can obtain something that you want or something that you want to invest in.
Yeah.
But anyway,
we're here to talk about.
Yeah, but Facebook, because even me as a local business owner, I buy ads on Facebook to promote my insurance agency. So, and I see other companies, bigger companies, smaller companies, mom and pop, household names, and bigger ones that are paying Facebook to put their ads out on there. And they're doing it now with Instagram. So, yeah, I would invest in Facebook. And if I can't afford the stock, I'm going to look into the option. What
about you, Henry? What is your take on Facebook and kind of what we're talking about here?
Yeah, I'm just looking at the chart. I have the long-term trend price at around maybe $290. So that's that could be your risk. Looking at the RSI, so I look at RSI. RSI looks good, which is the relative strength. When RSI is low, that's an indicator that it's at a good price, and it's shot down below 20, right around 317, which was right at the 200-day. So that's a good sign. It's on an upward trend. They make a lot of money. So I have Facebook. My average price in Facebook is around $170. So I'm not looking to sell any of it. If you had none, then what I would do if I didn't have any Facebook and I really wanted to get into it, because like you use Facebook all the time, and and you see the revenue that it creates and the demand that it has. So if I was looking to get into Facebook, I wouldn't mind putting some money in here. If you wanted to play it safe, you could put some money in right now it's at 324. Or if you wanted to be risky, you could put it all in, just knowing that, okay, potentially it could come down to like 295, and that's okay. But long term, it'll bounce back up. So and that's how I use technical analysis, just to know where am I at this level, and what is my risk is I could lose $20 a share, but long term I like this company, and maybe if it goes down to 300, I'll buy a little bit more. If you have that attitude, then you're fine. But if I would just be careful if you buy it at 324 and it goes down to 300, say, oh, I'm an idiot, I'm out. I wouldn't do that.
Yeah, and that's why I'm watching the 200-day, because if it falls below there, then I'm not purchasing. I'm waiting for a larger fall on there. But if it starts, but you're also on this chart. What is that?
I said, so this is the one thing that people do sometimes, that they really want Facebook and I like it, and And so you're saying, I'm going to try to time the market and wait for a dip. What if it doesn't? What if it goes up past 380, which is the resistance level, and then keeps on shooting up? Then
Well,
you're
see-
going to say, oh man, I missed it.
But that's what I'm saying right here, right in that middle center, right there. It's bouncing off of there, and there's resistance there. You look if you look at your what was this? What date was
Right.
this? On October 20 or the 12th. Today's the 15th. So earlier in the week, you got a lot of resistance. It bounced right off that 200. It closed. It closed on a high, but then the very next day, you got a lot of resistance back down towards the 200. And then you got on what is this Thursday? You got a high right there. You got that green, that very small green candle right there. You got a high there. And then you got a lot of resistance. So there's a lot of resistance to stay at that 200. And if it drops below that, I'm not buying. I'm going to wait a little bit longer. But if I start seeing some green candles or green patterns upwards, especially with, with the MACD and then the what is this? This is my 9-day. So that's on the 9-day moving average. If I start seeing that going up, I'm probably going to purchase at that point. But again, all that to say, I think going back to original discussion is like, this is information that I think as you explore it, as you get to know how these things work, that you want to incorporate that into the decision and not be emotional about it. Not just hear a stock tip, me being on here and saying, hey, maybe you should consider Facebook. That shouldn't just be the be all end all and go put your money in there. But that's what a lot of people tend to do. And that's what I would do. When it first started, it's like, oh shit, I need to buy stocks. So initially the first thing I did was just go buy a bunch of stocks, not knowing this stuff.
But you're saying that you wouldn't buy it if it went like below what, to something?
If it closes today below the 200, I'm waiting.
Okay.
But if I start seeing some green candles on the upward trend, if I start seeing it climb, then I'm probably going to purchase at that point and see where it goes at that point.
See, and
That's
I'm
not gonna
different.
happen, though.
And I'm different. I have a different approach. Because if I see it there, I'd probably get it when you say, oh, I'm not going to get it at the 2 whatever.
Yeah.
I'd get in there because it's going to go back up. So that's what I'm saying. You still make money when the market's down.
Yeah.
So I'm in there and you have different parameters. You have your tools, your rules.
Yeah.
So, but that's me. Because I'm like, okay, if I see it going, it's a bearish one, it's going to come back up. Everything that goes down, what? Comes back up. And everything that's sideways eventually either goes down or goes up.
Unless you're Evergrande. Have you seen Evergrande?
But, that's me. So to get in
yeah,
and not at a lower price and make money off of it. But that's me.
What about you, Henry? We're wrapping up the show. We got about 2 more minutes. So if you want to give some last minute digs, Senor, I know you want to talk about crypto briefly.
Sure.
Under 2 minutes.
He's all excited. He's like, yes.
Everybody wants to know about crypto. Everybody. Shiba Inu.
Yeah, so
No.
Bitcoin has that cup and handle pattern.
Let me. You wanted to show everybody the cup and handle. Sorry.
It's breaking out. It's I think, what is it at now?
You Bitcoiners, hold on. I'm getting to the cup and handle Henry's talking about.
I've been talking about Bitcoin for a while. Bitcoin is up 100% since July.
Hard to do this on the iPad, by the way.
It's up 50% in the last month. There's a lot of positives for Bitcoin. There's
I know we hit over. We're at 61,000 today.
Wow.
So
yeah, that's called a breakout. That's why they say to the moon, because it looks like a spaceship taking off.
Well, and there's a lot of people predicting it's going to hit 100,000 by the end of the year.
I think I mean, there's a lot of ways to try to. I know this for sure. The all-time high was 64, and we're so close. It's going to go there. That's for sure. So it's going to test that, and I have a feeling there's so much positive news with it right now that I think it's just going to continue higher. But there's a lot of models how to evaluate this. The biggest one is the stock to flow model by Plan B. I know you don't like him because he wears a mask, but it basically just shows you it's a model that was used in commodities, so like gold, silver, diamonds, even real estate, where you take the supply divided by the flow that's coming in, and you can come up with predictions of where the prices will be. And he sees it going to maybe 130 by the end of the year. And then, like I think I mentioned on your show, you can use just like a Facebook model, which is number of users.
Yeah.
And in January, the price was around 30,000, and then by summer it had doubled. So that's why this summer I felt like, okay, this thing should be worth around 60,000, and it's only at 30. So I felt it was undervalued, whereas real estate, stocks, bonds, everything else was at all-time highs. Crypto was at a discount of 50%. And so if that growth continues, so if from July to the end of the year doubles again, then you're looking at somewhere like 120. So that's where I think it's going. You have countries
adopting it as
El Salvador is using Bitcoin, and they had, like, within a month, so over 50% of their people had no access to banks, and then within the month there was more people using the Shivo Bitcoin wallet than had access to banks. And then what was the other country? I think it was it Brazil?
I think it was Brazil.
Yeah, they have El Salvador only has 6 million people. Brazil has over 200 million. So you're going to see this. It's called game theory, just people getting involved, and it's like, hey, I don't want to be left behind. Yeah. And now the SEC just put out some information that they're most likely going to approve a Bitcoin ETF, a futures ETF, which won't. It's not going to allow, but that could be a precursor to a real Bitcoin ETF. But that'll allow big corporations to now that want to invest in this thing, but they think it's too risky. If there's a futures ETF, they can hedge their bets in it. So that will accelerate.
Yeah, and I think the again, we go back to the emotions part. I think the sexiness Bitcoin offers is that extreme volatility. There's people that are able to predict it. Obviously, it's not something that I'm like throwing myself 100% into right now. I know Satoshi does, and he encourages that behavior quite frequently with me, but that's just our relationship. But we're at the end of the show. We're a little bit over. Ms. M2, do you have anything? What did you learn today? What did we accomplish today?
What did we accomplish? A lot.
What was your takeaway?
My takeaway is if there's more thoughts, more opinions, and more heads, we could, obviously come up with a solution and come up with tips and give advice to one another.
Perfect.
Yep, that was my takeaway.
And so are you coming to our event next Thursday? I'm putting you on blast. You get to meet Satoshi. Satoshi's going to be here in person. He's actually going to be here for the finance show next Friday, but we're getting ready for our RCA Network event next Thursday, and Gabby would slap my hand if I didn't mention that. So tickets are available through Eventbrite. So if you go and look for
I'll
RCA
get it right
Network
now.
And purchase a ticket, you can come and see our keynote speaker, Jill Kimmel, who is Jimmy Kimmel's sister, as well as many other things that we got going on that day. It's a networking event. It's about business, about entrepreneurship, all the stuff we talk about here. Anything else, Satoshi, that we missed that we want to cover?
That's it. I'm excited to come. I want to see the studio. I want to meet everybody. And so,
you haven't seen the studio at all.
Yeah. I'm excited.
I
want to go right now, but you'll have to wait.
Yeah, we're getting ready for a drunken weekend fest, but that's us personally. So I want to
not investment advice.
Not investment advice.
We're not advisors at all. We're just here to talk about money. Hopefully you learn something. I learn a little bit of something every time we get on.
Absolutely.
I want to thank everybody for joining us on a Friday at the lunch hour. Yep. A little bit late. Come and see us again next Thursday at our event. You're going to meet M2. You're going to meet Satoshi. Meet the whole gang here at RCO Network, and hopefully see everybody.
Don't forget, if you need insurance, call me.
Oh, yeah. Oh, shit. Yeah. Hold on. Jesus Christ. I told her,
have a fun and safe weekend.
Hold on. Look at this sexy picture. Hold on.
No, stop making fun of me.
What do you mean stop making fun of you? Hold on.
You're making fun of me.
I'm not making fun of you.
You do. You make fun of me. So anyhow.
Anyway, here we go. We good.
Call me if you guys need insurance. I'll help you save money.
I'm putting you on here. Hold on. Where's my display? I need to get back there.
When I come to the studio, Robert, I want to do we'll do some chart analysis next week. Just,
we'll do some TA.
They can watch that.
Oh, see?
No, that works.
There you go.
So again, if you want to contact M2 or another word, Erica Martinez.
Yes.
No, she goes by M2, but only here at the studio. Martinez Associates, Auto, Home, Business, Renters, Insurance. Erica MTZ Morales. I like the Morales part though. I think Satoshi likes Morales too. 602-282-4096 is Miss Martinez's information. So give her a call about your insurance needs. Okay, here we go. And we're going to be ending the show now. I try, I try. And sometimes I win. Sometimes I'm successful. But next Friday, we'll be here live and in studio. Come check us out Thursday. See y'all later.